Bitcoin has been holding above 88K today pretty strongly, and in today's episode I want to talk about how January might actually be a bullish month. Let's get into it. Welcome back to Flex Candle, where we read the candles and flex the moves. Right now it's about 4:20 p.m. Eastern time and the price of Bitcoin is currently at 88,185. We're gonna start off here with the 12-month chart. This closes in 1 day and 3 hours. All we have to do is really get above 93,000 and we could end up closing a bullish year. It'll be a green candle. You know, obviously we went up as high as 126 and change, but at least we'll end up with a green candle instead of this red candle. Now, something that I'm looking in the charts that looks bullish for next year, which will be January, is that the monthly is going to also close in a day and 3 hours. If we could stay above this 21 moving average, which is at 87,600, like I said, I'm seeing bullish hidden divergence here, where from here to here is sloping up and the RSI here is sloping down. That's bullish hidden divergence. Also, as you can see, the stochastics RSI are starting to reset. So once this candle closes, it could be possible that we could start going up, and that will correlate. Also, check out the 3-week stochastics RSI are also low. This closes on Sunday in 5 days and 3 hours. The 2-week also closes on Sunday. We're also low on the stochastics, and the weekly has been just waiting here for so long, just dragging. This also could be on the way up. So we could have a scenario where we have the monthly, the 3-week, the 2-week, and the weekly stochastics all wanting to come up at once, and that could give us a very bullish January. Now, does that mean that we're going to break all-time highs? Not necessarily, but maybe we could finally make that run to 100K. Who knows, if maybe we could get up higher. So that's something that I'm seeing in the charts that's indicative that maybe January might be pretty good. Now, we take a look at the weekly chart here. Like I said, this closed in 5 days and 3 hours. All we really need to do is stay above this 100 moving average, and obviously if we could get back above this 80 moving average, that would be great. Now, we take a look at the other time frames. The 6-day is also low. It's also waiting to pop back up. The 3-day chart, we still have some room to continue going up. It's been like dragging, but we still need to get above this 200 moving average. That's currently at 89,724. This candle closes in a day and 3 hours. If we could do that, then we have a shot to continue going up as well. The 2-day chart is not looking too good. The stochastics are toppy. It looks like we could roll over. If we could get above this 21 moving average, and I feel like this double bottom could still be in play, and this could bring us up towards this 200 moving average, which is at 101,334. Now, on the daily chart today, we made a pretty good move. We went up as high as 89,400, but once again, we got rejected. We fell back down to 87K. Now we're holding 88K, but I'm starting to see that we're getting a little bit stronger and we're trying to hold 88K a little bit more. Maybe we'll start making that move now back above 90K. This candle on the daily closes in 2 hours and a half. We're still below the 21 moving average. All we would have to do is close above 88,287 and we could get back above the 21 moving average. The 50 moving average is currently at 90,157. We were there yesterday. As you can see, we wicked up, touched it, but then we fell back down. If we could get a green candle here, this could be tweezer bottoms. Maybe this will be the beginning of going up. And even though I feel like this is a bear flag that we're in, and this could take us down to about 65K, if we could break this pattern and come up and get a move up, maybe this could be negated and maybe this whole thing is just a bottom pattern here. I'm also seeing a possibility that this could be some type of inverted head and shoulder, where this is the left shoulder, this is the head, and this is the right shoulder. You know, the measure move again would take us above this 50 moving average. Keep that in mind. The only thing that's a little bearish here is that the stochastics RSI are a little toppy, so this could start rolling over, but we could also drag here for a while like we did, and you know, that could cause us to get a higher move. If we take a look at the other time frames, the 22-hour chart looks like it wants to roll back up, so that's in favor for the theory that I'm telling you on the daily chart. The 12-hour chart is also on the way up with the stochastics. The 10-hour chart, we still have room to continue going up, and we are above the 21 moving average. That is a bullish sign. 8-hour chart is also above the 21 moving average. The only thing that I'm not liking is that we're currently having a red candle here. This could be tweezer tops. This could cause us to come back down, but the stochastics are low, so if we don't roll over, we could continue going back up here. Now, on the 4-hour chart, the stochastics look like they kind of do want to roll over. We did get like a tweezer top here. We got rejected from the 200 moving average again. At this point, this is just ridiculous already. As you can see, the 4-hour chart is allergic to the 200 moving average. Every time we get up, we get sent back down. Get up, we get sent back down. So right now, from these tweezer tops, it looks like maybe we could come back down. As long as we don't go below 86,853, I would say that we could still remain neutral to slightly bullish for the short term, just to get a higher move up, maybe to 93K. Like I said, just so that we could close the yearly on a green candle. On the 1 hour chart, the stochastics are getting low. We still have more time to come down before we reset, but we are above the 21 and the 200 moving average. That's kind of bullish. You could say that this is some type of a falling wedge. No, that could break us back up to about 89K. We have resistance on 89K, 90K right now. What's important is to get above that 90K. Now, what I'm looking at here is that this could be a possible cup and handle as well. And if this is a cup and handle, that could bring us back up, to 90K. So this is a possibility. This looks like it could happen, especially if we close this candle here in the next 30 minutes green. This could be tweezer bottoms, and maybe we do spike back up to 90K. This looks like it's in play here. And on the 15-minute chart, we're also low on the stochastics RSI. We are already breaking out of this falling wedge, the handle part of the cup and handle, and we are above the 200 moving average. All we need to do is get above this 21 moving average, and if we could do that, we could start breaking out of this cup and handle. So right now, I'm seeing us possibly being able to get to about 90K. Once we get there, I don't know if we're going to get rejected. We could get rejected from there because it's been happening, but like I said, we have this end of the year vibe that's happening. It looks like we might be doing a small rally, and for some reason, again, this is not technical analysis, this is just me, what I'm thinking, which really doesn't mean anything, but I just feel like for some reason we are gonna want to close this candle green, even if it's just by $1, just to make this kind of green and to erase this red. Let's see if my hunch is right. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.